This is Alan Farley from FX Empire. Delta Airlines reports Q3 revenue next week when it's expected to report a small profit. Taking a look back, a rally topped out right in the low 60s at the start of 2018. It fell into a training range with support right here in about the mid 40s. It posted a nominal new high in 2019, but dropped back into that range, which broke down during the pandemic decline in February, March 2020. Now, the stock fell to a 7-year low at that time, and the subsequent recovery unfolded in one, two, three waves up, almost to the 786 retracement, which is right here around 53.50. Now, this was back in March. Fell through the summer and started to bottom out just when the Delta variant was starting to bottom out in the United States. Jumped back above the 200-day moving average is right here around 42 in September, and it's holding just above that level as we head into earnings. Now you can see the real stasis point here between this 200-day moving average and this 50-month moving average, and I think this is going to hold like glue over the next few months because there's not going to be much, I think, good news or bad news for the industry. And at some point, perhaps it looks forward to 2022, but it may be a little bit premature for that. But there are reasons to be optimistic heading into next year. Business travel is expected to resume at the turn of the year, and we also have international travel returning to the United States starting November. Now, this is a very big source of revenue for the big three carriers, with up to 17% of total revenue as a result of international travel. So the future's starting to look better, but this isn't a particularly good spot for either bulls or bears because we're still close to this big resistance level, and we still have we've made a very big recovery off the low, so we could get a lot of sideways action all the way into next year, and I think the stock's going to be fairly priced right here in the 40s.